everyone, and welcome to episode 25 now of The Bottom Line. As always, I'm joined by my co-host here, Syed, and we're bringing to you a very special episode this week. As always, we're going to kick things off with our tech update. Syed's also going to go into a discussion about Solana, which will be releasing a decentralized exchange on their blockchain. We're also going to dive into Bitcoin versus Ethereum and which one we think is going to outperform over the next 5-10 years and beyond. And we're also going to recap the CPI results that came out last week. And in terms of a forward-looking look, we're going to actually look into the G7 Summit, which is set to take place shortly. So just giving brief thoughts on what to expect from there. We're also going to end things off with our stock picks for this week and for the last week and this upcoming trading week. And we're also going to announce the winner of our giveaway for our special 25th episode. So again, lots to look forward to in this episode. Syed, with that being said, the floor is yours.
Thank you, Deepak, for the introduction. This past week was pretty dry in terms of tech or technology or infosec updates. But there are a few things that did show up that you may or may not have heard of. So let's get started. So first, we're gonna start out in space. So Jeff Bezos' space venture Blue Origin auctioned off his seats Saturday on its first crewed space flight scheduled on July 20th. The winning bidder will fly to the edge of space with the Amazon founder on his brother Mark and on Blue Origin's New Shepard rocket. And New Shepard, a rocket that carries a capsule to an altitude of over 340,000 feet, has flown more than a dozen successful test flights without passengers. So that's something to keep an eye out on. I'll put the article in the description. And this came out just today, on Saturday, at the time of this recording. It came out today in the afternoon, and we're recording this at night. So yeah, it came out today. So something to keep an eye out on. We got Branson's Virgin Orbit, and that's in talk with former Goldman's partner SPAC for $3 billion deal to go public. So Virgin Orbit, the satellite launching spin-off of Sir Richard Branson's Virgin Galactic, is in advanced discussions to go public at about a $3 billion valuation through a SPAC, and CNBC confirmed this again on Saturday, so today. So the SPAC, led by a former Goldman Sachs partner, is Next Gen Acquisition 2. A person familiar with discussions told CNBC, and the deal is to be expected is expected to be announced in the coming weeks, the person said. So once again, something to look out for there, and I'll put the article in the description. And then now with data breaches, there was news that Audi and Volkswagen today, again on June 12th, they suffered a data breach which affected 3.3 million customers. Audi, so what happened was Volkswagen Group of America is the North American subsidiary of the German Volkswagen Group, and it's responsible for the US and Canadian operations of Volkswagen, Audi, Bentley, Bugatti, Lamborghini, and those cars, right? So according to the data breach notification, it disclosed that a vendor left unsecured data exposed on the internet between August 2019 and May 2021. And yeah, so you can read more about it. I won't go into too much detail, but the article will be in the description. And once again, it involved 3.3 million customers, and 97% of those were affected, relating to Audi customers and interested buyers. So yeah, another week and another breach. Next, we're gonna talk about EA, so Electronic Arts, and hackers stole a ton of EA data, including valuable source code. Again, won't go into too much details, but just at a very high level, they confirmed that hackers stole a massive amount of data from EA, and a dark web forum poster claimed to have obtained over 780 gigabytes of data in the attack, including the source code for FIFA 21, EA's Frostbite game engine used by FIFA, Madden, Battlefield, Star Wars, Squadrons, and Anthem. So the company said, quote, "We are investigating a recent incident of intrusion intrusion into a network where a limited amount of game source code and related tools were stolen. And that's what an EA representative said in the statement. The representative added that no player data was accessed, and we have no reason to believe there was any risk to player privacy. So that's good news there. Once again, you can read the article and it will be in the description below. Also, a crypto attack that's targeting Kubernetes clusters. So we talked about Kubernetes and containers in I believe episode 23 during the tech update. Once again, in the future I'll go over how containers work, but for this development, essentially what's happening is that Microsoft has warned that an ongoing series of attacks targeting Kubernetes clusters running Kubeflow ML instances are getting attacked by malicious containers mining Monero and Ethereum. And according to Microsoft, these attacks started at the end of May. Once again, you can read the article in the description below, and I'll be provided for you. And to wrap up episode 25 tech update, wanted to let our viewers know, for those of you that use Samsung Android phones, basically the pre-installed apps that come with your Samsung phones, they may have an exploit where personal data could be leaked without your consent. So the impact of these bugs could have allowed an attacker to access and edit the victim's contacts, calls, SMS, MMS, install arbitrary apps with device administrator rights. So that's being like high privilege rights, or read or write arbitrary files on behalf of the system, which could change the device's settings. So that's the developing story there, and you can read more of it. The POCs in there too, the proof of concept of the vulnerability, and you can read more on it if you're interested. But yeah, that wraps up episode 25 tech update.
That tech update. Just moving on to our next segment. I know we're going to go at length here on our Bitcoin versus Ethereum discussion on which one we think has more price potential moving forward. But before we get into that discussion of the two powerhouses, I wanted also to address some of the developments we're seeing on Solana here. So I know you had a lot to add on there, so I'll pass it back to you again, just to give our viewers more of an understanding on what that decentralized exchange will look like on Solana's blockchain.
Yeah, thank you, Deepak. So it's called Solana X, and it's claimed to be the fastest decentralized exchange built on the Solana blockchain. For those of you that may or may not know, we've talked about Solana quite a bit, not as much as the other altcoins, but we've mentioned it a few times. It's a cryptocurrency, and it has great potential. It's again, I'm not going to get into too much detail of how the coin works, but essentially Solana X is a new DeFi protocol built on top of the Solana network that will pretty much catapult decentralized finances to an unprecedented performance levels. As a decentralized and non-custodial automated pool-based liquidity mechanism supporting trades within the Solana ecosystem, Solana X is looking to revolutionize DeFi. The Ethereum mainnet proof of work consensus design flaws are no longer news, right? Because we all know about them, as they have stifled Ethereum's growth for a long time. For example, right, Ethereum's 15 transactions per second are far too sluggish, resulting in record high transaction fees, and we complain about those a lot here at the bottom line as well, right? We're venting about, especially me, I'm venting about Ethereum's high gas prices. So that's a problem. So, and other coins are taking note of that. We've seen this with Cardano trying to release their own DeFi, with Sunday Swap and Ye Swap and all those. And then now it's Solana's turn. So more on Solana X, it's trustless token swaps trading, and more significantly reorientation of the crypto world towards Solana. Solana X is destined to become a vital asset exchange community platform. Solana X does not have an order book because they remove all intermediaries, complexity, and time-consuming procedures from the equation, unlike Ethereum, giving users the freedom to trade without fear of censorship or losing ownership of their assets. And that's really great. So just to summarize, Solana X has the following features. Number 1, users have complete control. Number 2, next level liquidity. Number 3, frictionless yield. Number 4, light speed swaps. And then number 5, DeFi is faster, cheaper, and more powerful. And then just to sum up the project's goals, the goal of the project is to utilize a blockchain to bring DeFi even closer to people like me and yourself, Deepak, and our viewers, hence allowing to scale even better. make financial tools more accessible to the general public, make it faster to cut cost on gas fees, hence cheaper, and that's the problem that Ethereum has, which I mentioned like a few seconds before. Build an interface that allows people to create a comfortable trading environment. For example, limit orders, alerts, and more. And then last but not least, a central order book provides liquidity access across the ecosystem. So individuals are not reliant on a single source of liquidity. So that pretty much sums it up. And pretty much, why would you choose Solana? That's where I'm going to end off with. Why would you choose Solana? So the Solana blockchain has increasingly become the blockchain of choice for newly launched projects, right? As such, the company has reevaluated its strategies and now expanding its capacities to accommodate the rising demand for faster blockchain services, as I mentioned before. So the blockchain aims to be the go-to network for a decentralized application. That's according to the sources at Solana, right? Over time, it's looking to effectively compete or even surpass the market leader Ethereum, and we see that with Cardano as well. And we'll have the Solana versus Cardano debate in the future for sure. Today we have on next next we have the Ethereum versus Bitcoin debate. So we'll save the Solana and Cardano debate for next episode, just as a prelude to that. But more on the Solana blockchain. So the Solana blockchain uses a new method of verifying transaction proof of history to solve the scalability and speed issues that have been problematic to the predecessors. So Bitcoin and Ethereum, as I mentioned before, and scalability is one of the most challenging aspects of the blockchain and technology to overcome, right? And as these networks expand, they frequently encounter transaction speed and confirmation time constraints, which constantly leads to a higher cost of transactions. Through the proof of history, right? Solana can handle thousands of transactions per second with significantly cheaper transaction fees. And Solana will attempt to achieve these by maintaining security and decentralization. So that wraps up my little soliloquy on Solana and Solana X. But keep this coin on your watch list. It's a great coin, a great project. That is Solana X, and with that, we're gonna transition into our Ethereum versus Bitcoin debate.
Just before we transition off there, I'm just going to add a couple of comments here. Really, there's a lot of different projects out there that try to dub themselves the Ethereum killers of the world, right? And Cardano being at the forefront of it, Solana is also not far behind. But I think for especially these altcoins now that they're gaining more market share, I think it's almost a first mover advantage here, right? It's really a race to the finish, right? Who can really, like, I know they're all aspiring to have transactions occur at lightning speeds, obviously, at lower transaction costs as well, because ultimately, as an end user, you don't want to pay astronomical transaction fees for every transaction, and you want it to be done instantaneously, right? So I think with that being the premise, many projects are out there. I just don't know how fast they can get, how fast really they can implement it, right? And I think Solana's being very quick here to act on these improvements, which is why it's gaining significant market share ahead of other altcoin projects. But yeah, we can definitely save this discussion for the future. But I think I still think Cardano is still probably, I think it's in my top three after Bitcoin and Ethereum. But definitely Solana, as it continues to make more and more progress here, and you see the results, right? And the culmination of all their efforts, I think that'll elevate it maybe to the top 10 eventually. But yeah, no, I think it's something that we do have to closely monitor on, and they do have to cater to the end users, which they are trying to do here. So, no, definitely something we'll keep an eye on, and as we hear more and more about how they're updating their platforms moving forward, we'll try to give our viewers the most up-to-date and recent information. So thank you again for that.
Yeah, 8bar is also a good one. Just to end off on another note for our viewers to do their own research. There's Solana, there's 8bar, you mentioned Cardano, there's many of them. And we'll talk about all of these, but for our viewers that want to research on their own, search up 8bar, search up Solana, search up Cardano. All these coins, they're definitely, they have potential for the future.
Perfect. Now that we've had our discussion about Solana, I think now we should transition over to our discussion about Bitcoin versus Ethereum here. So I'll start off with this article that we'll provide the link to, obviously, in the description here. But as reported this morning, Bitcoin just got its first makeover really in probably about 4 years, which is really going to help position it to be a competitor with Ethereum right now. So obviously, what we've heard over the last little while is that Bitcoin's really just been stagnant for a long time. Obviously, it was was the first cryptocurrency out there, so it became the leader sort of de facto. But after that, it didn't really go through much of an upgrade, which is why a lot of people were speculating maybe Ethereum can overtake it over the next 2-3 years, maybe 5 years, 10 years, however long it's going to take. But at some point, people are expecting Ethereum will overtake Bitcoin in terms of just market value as well, right? So with that being said, I just wanted to quickly summarize what this change is, what this makeover is. And Syed, maybe you can talk a little bit more about how Ethereum really positioned itself as a main competitor to potentially overtake Bitcoin, right? So again, just going over this now here, the article starts off saying, yeah, the first Bitcoin upgrade in 4 years has just been approved by miners around the world and is a rare moment of consensus among stakeholders and crypto experts that it's a pretty big deal for the most popular cryptocurrency in the world, which is fairly obvious here, right? So the upgrade itself is actually called Taproot, and it's due to take effect in November. So not right now, but a few months from now, almost 6 months, we can say. But when it does, it will actually mean greater transaction privacy and efficiency. And crucially, it will unlock the potential for smart contracts, which is a key feature of its blockchain technology, which eliminates middlemen from even the most complex transactions. So obviously, the whole idea about cryptocurrency being decentralized and as efficient, and obviously the transactions need to go through as quickly as possible. In order to do that, a crucial element is to actually have the elimination of the middleman, right? So this new feature is actually a very important step in the process here, right? And just to quote Alice Killen here, who's the founder and managing partner of Bitcoin-focused venture firm Stillmark, quote, Taproot matters because it opens a breadth of opportunity for entrepreneurs interested in expanding Bitcoin's utility. And unlike Bitcoin's 2017 upgrade, which was referred to as the last civil war because of the contentious ideological divide separating adherents, Taproot has near universal support, in part because these changes are fairly incremental improvements to the code. So there's no dramatic change in the underlying code here. It's just natural, organic upgrade of its code to make it more efficient and more user-friendly here. So with that being said, I know the whole idea of smart contracts is not new to you, and it shouldn't be very new to our viewers who've been watching our earlier episodes. So we'll spare the details there. But I just wanted to get your thoughts here. So, like, what do you think of this change overall in terms of making Bitcoin more competitive, not just from popularity amongst retail investors being the go-to, as it was the first mover, obviously, in the space, but in terms of the utility and the efficiency and the processing behind the scenes, how do you think that stacks up against what Ethereum is doing? And do you think that Ethereum does have the potential to really generate a larger market share than Bitcoin moving forward over the next 5-10 years and beyond?
Yeah, so we know that Bitcoin is pretty much the king of cryptos right now. As we saw in the news, you may or not have heard, El Salvador pretty much making Bitcoin their accepted legal currency, right? Decentralized currency, and I believe we're going to see many nations do that. So Bitcoin is at the top, no doubt about it. However, and they're doing great things like you mentioned with the Taproot thing that you mentioned. And again, we'll talk more about that in detail. I do plan to cover that in detail, maybe a TikTok or something, future TikTok coming up. We'll talk about how that project works more in detail. Great thing for Bitcoin. But when it comes to Ethereum, and as you may or may not know, Ethereum 2.0. We've talked about briefly a little about it here at the bottom line, but thought I would tell our viewers what it is and what to expect from it. So Ethereum 2.0 is an upgrade set to come to the already existing Ethereum blockchain, and it aims to increase the speed, efficiency, and scalability of the Ethereum network. I went on a rant about this and in the previous segment with the Solana of how Ethereum needs to work on its efficiency and scalability, right? But with Ethereum 2.0, it's going to enable it to address the bottlenecks and increase the number of transactions. The pseudonames for Ethereum 2.0 are ETH 2 or Serenity. which is spelled SERENITY. So if you hear that term, that just means Ethereum 2.0. And basically, Ethereum 2.0 has some fundamental changes, right, in its structure and design as compared to its previous version. The two major changes are proof of stake and sharding. Let's take a look at like how these terms basically work, right, to understand the functioning of Ethereum 2.0, and that could perhaps tell our viewers the difference between what Bitcoin's doing with their Taproot project and what Ethereum 2.0 it's all about. So, what is proof of stake? We talk about it a lot. Let me explain at a very high level what it is. So in a proof of stake consensus mechanism, right, there are validators instead of miners. Their major role is to propose new blocks, provide computing power, storage, bandwidth to validate the transaction. The validators are given periodic payouts in Ethereum. There's a deposit contract of around 32 Ethereum that should be locked in by these validators. It is a type of security deposit, essentially, that gets forfeited or fully or partially in an event of any malpractice, right? And this method is very effective in curbing malpractices. And then there's also the concept of sharding. So sharding is the process of splitting one blockchain into multiple blockchains known as shards. It makes the entire network more efficient as a single validator does not have to handle the workload alone, right? At a very high level. Not going to get into too much depth into that. But essentially, every validator maintains information related to their own shard. These validators are also shuffled between shards regularly to avoid any kind of manipulation. And that's a security feature that's going to be on Ethereum 2.0. And the beacon chain is used for communication and coordination between these shards. Now, to understand this better, just gonna for those of you that may not know or are new to crypto, I'm just gonna go over how Ethereum works in general, right? So the validators are the most important aspect of Ethereum 2.0 as they're solely responsible for its infrastructure and maintenance. Now, every validator has two keys: a signing key and a withdrawal key. A signing key is used to perform works for the blockchain. There are three main functions of a validator: to propose and add blocks to the beacon chain or one of the shared chains, to attest the validity of the beacon and the shard chain, and to report malicious behavior in any validators. Now, due to these reasons, the signing key must be online 24/7. The withdrawal key performs actions on the funds. It's not necessary for the withdrawal key to be available all the time. But however, it needs to be secured as the person has control over all of the funds, right? If you want to become a validator, you need to lock up the 32 Ethereum that I mentioned into the beacon chain, and the validators do not work alone. They mostly come in committees where in groups of minimum 128 validators vote on the head of the blockchain, and the vote casts are of different types. They're LMD GOAT votes, Casper FFG votes. I'm not going to get into too much detail. Again, I'll put a bunch of articles and resources in that, and you can read about that. But basically, after that, a checkpoint is the most recent block in the first slot of an epoch. An epoch comprised of 32 slots. Once 2 or 3 validators agree upon the most recent checkpoint, it gets justified. Once the previous checkpoint is justified, the last block gets finalized. So after 2 epochs, 1 block is finalized. You may have got lost there. Apologies for that, but again, it's just the way of how Ethereum works and how the verification of each block works. You can read more on that if you're interested. But I wanted to go in depth there because I can explain the difference between Ethereum and Ethereum 2.0. So the major difference between Ethereum 2.0 and its counterpart is the consensus mechanism which they use. Ethereum uses proof of work mechanism, which I just explained in my little technical soliloquy of the blockchain, while Ethereum 2.0 uses proof of stake mechanism. Now, the proof of work mechanism is an energy intensive process in which complex mathematical puzzles are decoded by miners with the help of computer hardware processing power. We talked about more how mining works in our crypto exclusive, so be sure to check that out. But that's what it is, right? And then this is also used to verify new transactions, and whoever decodes the puzzle first adds a new transaction which contains the previous transactional records making up the blockchain. Now, in a proof of stake mechanism, which Ether 2.0 is going to provide, crypto is used to verify a transaction by the transaction validator instead of the miners. The validators must propose depending on the time and the amount of crypto they hold. When a majority of validators claim to have seen the block, it is added to the blockchain and they're rewarded for conducting the blockchain proposition successfully. This is how forging or minting takes place. If you hear those two terms, that's essentially what it is. Now, proof of stake is a more energy efficient mechanism as compared to proof of work, since it uses less computing power to secure a blockchain. So that's one advantage that Ethereum can leverage if it wants to take over Bitcoin with the transition to Ethereum 2.0. Proof of stake is gonna reduce the amount of energy it takes for sure. And there's also things on security, like how secure will Ethereum 2.0 be. So the one thing to note here is that the most important advantage of Ethereum 2.0 is going to be its scalability. Ethereum 2.0 will have shard chains, due to which it can conduct up to 10k transactions per second, whereas Ethereum can only support 30 transactions per second. So this also leads to a lot of delays in network congestion currently, right? And that's not going to be the case in Ethereum 2.0. The implementation of shards chains speed up the network and can scale more easily as the transactions are handled in parallel chains instead of consecutive ones. So the main idea behind devising an upgrade to the existing Ethereum is to exercise more safety in the entire transaction. Many proof of stake networks, right, have a very small set of validators. The amount for the decreased network, the accounts for the decreased network security are essentially secure. Like Ethereum 2.0 is gonna require a large set of validators, approximately 16,384, which makes it more decentralized, secure, and less prone to manipulation. So just to sum it up, Ethereum 2.0 is gonna be secure. It's gonna have a proof of stake, which is gonna make it much faster, and it's gonna provide way more transactions per second than Bitcoin. So this is why I think that with Ethereum 2.0 coming out, it's gonna put Ethereum right up next to Bitcoin if it already isn't. But again, Bitcoin is gonna be like the Nokia of cell phones, right? Or like the I wouldn't say BlackBerry, because I don't think Bitcoin's gonna go anywhere extinct. But it's gonna be the Nokia, because Nokia still exists, right? So it's just a matter of Ethereum 2.0 coming out. And then when Ethereum 2.0 comes out, we'll see all these altcoins that promise to be fast and stuff like that. We'll see a bunch of them just disappear. That's just my personal opinion on it. But what are your thoughts, Deepak?
I think as I was listening to you going in depth on these different changes that they're making to ETH 2.0 here, I was thinking like, yeah, all these things are in development on the Ethereum side, and Bitcoin decides after 4 years to make a small little change. I don't want to discount it by saying it's a small little change. It's still a significant change, but I mean, it pales in comparison to all the initiatives that Ethereum's taking on. So I mean, again, it leads me to believe that, especially as Ethereum transitions really into more of a deflationary asset, which I think is something that's being worked on as well. Given that Bitcoin does have a limited supply right now, whereas Ethereum obviously is subject to inflation, I think as soon as it flips to the deflationary side here, or there's a more strict control on the supply of Ethereum, that advantage that Bitcoin naturally has due to restricted supply is going to dissipate as well. And combined with the technological advances that Ethereum is going to continue to go through and outpaces Bitcoin in doing so, I think it's almost inevitable that Ethereum will become the dominant leading cryptocurrency at some point. But again, before we leave off this discussion, I think just to validate all the points that we've made here, Syed, why don't you pull up the chart that really maps Bitcoin and Ethereum together here? So just looking at this chart here that maps Bitcoin and Ethereum together on investing.com, we're looking at the 5-year chart here. So really, it says 5-year chart, but I see it dating back to about 2019. So let's say it's about 2-3 years that we're looking at here. But you can clearly see the Bitcoin dominance, especially over Ethereum, has gradually declined. And more recently, in the last little bull run that we had, the hyper bull run that we had, really from February up until May, we can see like Ethereum actually gained quite substantially in terms of its price, whereas Bitcoin seemed to stagnate. So clearly you can see from this chart it's in a downtrend, and this downtrend indicates that that Ethereum's actually gaining more market share compared to Bitcoin. And at some point, obviously there's still a ways to go here right now, but at some point it wouldn't be surprising to me within the next 5 years, I'd say, based on the progress that Ethereum's making, that its market cap does eventually exceed Bitcoin's price. So exceed Bitcoin's market cap. But again, I accidentally mentioned price there, but that's a good thing I did, because I do want to clarify that price, just because I think that Ethereum is going to overtake Bitcoin in market cap, doesn't mean Ethereum is going to actually go to 100K per se, right? Mm-hmm. So again, make sure that you understand that discrepancy when people say that Ethereum can overtake Bitcoin. It's not in terms of price, it's in terms of market cap. And obviously that's dependent, the price is dependent on how much is in circulation. Obviously we know there's more Ethereum in circulation than Bitcoin. So obviously be aware of that. Don't invest thinking that Ethereum is going to all of a sudden go to $100,000 within the next few years, which, hey, I mean, crazier things have happened. But again, I think over the next few years, Ethereum's market cap, not price, should overtake Bitcoin, barring Bitcoin actually making a U-turn and actually implementing significantly more changes over the next few years.
Right, absolutely, yeah, and those are some great points you mentioned there for our viewers, because I feel like, and I was a victim of this when I first started out, I would just look at the price, and I really would be like, oh, Bitcoin's far superior than Ethereum, because just by the trading price. And I even did this in the stock market too, but then as I learned, I realized that market cap matters a lot. And I'm glad you mentioned that, and I don't want our viewers to make the same mistake, right? Always look at market cap. Don't look at the price, look at market cap. And that will give you a better judgment of where the stock or the coin is at. And again, if you have any questions about these terms like market cap and all that, feel free to shoot us a message or an email or whatever the case may be, right? And we can explain them to you for sure.
I think Ethereum's market cap right now is actually, I believe, I could be wrong here, Syed, but it's about 1/3 of Bitcoin's market cap. So again, if it were to actually overtake or match Bitcoin, really that's a 3x move from its all-time highs. Really, we're looking at around a $15,000 Ethereum, right? Yeah. So again, I don't know the exact market numbers right now, market cap numbers off the top of my head.
Right here, I think Ethereum, 279 billion. Sorry.
I don't know what Bitcoin's at right now. I know it was over $1 trillion at one point, but it obviously declined significantly. So
800.
I mean, okay. So again, we can say it's about a third or so, about 300 billion on Ethereum, about 800 billion of Bitcoin. So about a third. But see, that means that really from current levels, if Ethereum goes 3x from here, which would basically take it to about 10,000 Canadian dollars for one Ethereum, that would be equivalent to the market cap of Bitcoin. So again, that's something that I've been seeing circulating, like, oh, Ethereum is going to pass Bitcoin in terms of going over 50,000, 60,000. No, I mean, even if it pulls a 3x move from here, that'll take it to about 10,000 Canadian, and it'll be the same market cap as Bitcoin, which I don't think it will exceed Bitcoin's market cap in the immediate future. I think in the next few years it's possible, but that's why I think people need to temper their expectations, thinking Ethereum is going to go to like 20,000, 30,000, 40,000, right?
That's why understanding the fundamentals is key too, right? Because Ethereum 2.0 is they're still a while away. They're still working on it. So again, it's a long-term game here. It won't happen overnight. That's pretty much what we had to cover here. And once again, let us know if you have any questions or like anything regarding like market cap and all these terms. We'll be happy to help you out and explain to you about these terms and how and what to look at, what not to look at. With Bitcoin, Ethereum, or any altcoins. And next week, in next week's episode, we'll discuss the altcoins as well, as we promised. So Cardano, Solana, and how they work and like how and which one's gonna do better, right? Any closing remarks, Deepak, for the segment?
That's it from my end. Again, we are very bullish on Ethereum. We're bullish really on cryptocurrencies as a whole, and I think you've mentioned that many times now. But in terms of being the outperforming asset here, I think Ethereum is the way to go. Again, unless something changes on Bitcoin's end, I think eventually over the next 5 years, Ethereum's market cap should exceed Bitcoin's. But we'll definitely keep an eye on it. And obviously, cryptocurrencies are very volatile, and always there's something going on, right? So definitely keep an eye on it, and we'll try to update our viewers as quickly and as soon as we can. So.
Yep, so this is to be continued, as I'm sure throughout the next future, like years, we're going to have this conversation again. So stay tuned, y'all.
Moving on to the market now. Obviously, we mentioned last week to keep an eye out on the CPI report. So really what the CPI report indicated when it came out was that consumer prices jumped 5% in May, which is really the fastest pace since the summer of 2008, which is over 13 years ago, right? So we are seeing, even though the Fed's saying it's transitory, we are seeing heavy inflation year over year, 5%. And clearly that's an issue because I do not believe that wages have gone up 5%, obviously. So ultimately what this means is that our purchasing power has taken a steep hit, right? So again, just summarizing what happened in this report here, and we'll obviously provide the link to this article in the description below. But again, just like I summarized, the Labor Department reported on Thursday that consumer prices for May accelerated at their fastest pace in nearly 13 years as inflation pressures continue to build in the U.S. economy. So the Consumer Price Index, which represents a basket including food, energy, grocery, housing costs, and sales across a spectrum of goods, including used cars, which we've seen have gone up significantly in price, rose overall as a whole basket 5% from a year earlier. Economists surveyed by the Dow Jones had been expecting a gain of 4.7%, which again, even those expectations at 4.7% fell short of the actual result here, right? So again, the reading represented the biggest CPI gain since the 5.3% increase we saw in August 2008, which actually, eerily enough, was just before the financial crisis sent the U.S. spiraling into the worst recession since the Great Depression, right? So you can see here why there is so much fear in the market with these inflation numbers in place, right? And given the fact the Fed really doesn't want to raise interest rates, it's going to be very hard for them to suppress the rising, really, consumer prices here, even though they like to say that it's transitory. I don't necessarily agree with that per se, but again, that remains to be seen how it shapes up in the future. I know in previous episodes we looked at the cost of lumber, for example, the cost of oil, and we saw how much they've increased year over year. It almost looked like a cryptocurrency chart that went from January to May, where it just was relentless in its climb up, right? But yeah, no, just continuing on with this article, though the inflation readings are well above anything seen since the 2008 to 2009 financial crisis, the Federal Reserve has been largely dismissive of the numbers. As I've said, they like to think of it as just being transitory. The central bank officials believe that the current rise is due to temporary factors that will abate as the year goes on and look higher because of comparisons of the year ago period when much of the economic activity remained restricted due to pandemic precautions. So obviously because a lot of trade, for example, was shut down, overall the economy really was shut down at the start of the pandemic. They're dismissing the fact that, okay, yeah, we've seen a massive rise, but that's due to, first of all, supply chain shortages and the fact that there was such limited economic activity last year due to the shutdowns, right? So again, this is something that they're trying to ease really retail investors and obviously the institutional investors as well, but they're trying to ease our concerns that, okay, 5% year over year, like if this continues, we are headed towards a significant recession, right? Because we just don't have the purchasing power anymore. And what happens in these high inflation situations, you're going to only want to spend on essential items. And if you restrict your spending, then what does that do to the economy, right? It slows it down. So that's why there's so much fear about a recession taking place. Again, we'll see whether or not, if it is in fact transitory or if it's going to continue. But again, this is something we've harped about for the last few weeks on the bottom line here. But again, it doesn't take much for consumer sentiment to shift. And if there's any sort of indication that this inflation is not transitory, then you will see that have an impact on the broad market in general. And that might lead to a steep sell-off. So definitely keep your eye out on that. And again, like I said, you always want to be aware of what's going on from a macro perspective rather than just only a micro perspective. And this is one of the examples. So again, this is going to be a hot topic. It's going to be talked about probably every week for the next 6 months, 8 months, 12 months, whatever it is. It's going to be talked about quite frequently, so definitely keep your eyes peeled for that. Before we get into our stock picks for the upcoming trading week, I also wanted to briefly mention that the G7 Summit is about to take place. And just to really recap what's going on here, from Friday to Sunday, the leaders of 7 of the world's most advanced economies will meet in Cornwall, in the southwest of England. So the leaders will discuss shared challenges from the pandemic and vaccines to climate change, and ensuring that people everywhere can benefit from open trade, technological change, and scientific discovery, according to the UK government. It's the first in-person G7 summit in almost 2 years, and Britain wants leaders to seize the opportunity to build back better from the coronavirus, uniting to make the future fairer, greener, and ultimately more prosperous. Who will be there? The big names at the summit are undoubtedly the leaders of the G7, which is made up of the UK, Canada, France, Germany, Italy, Japan, and the US. The EU, which sends the presidents of the European Commission and the European Council, also attends, and the summit is seen as one of the few forums where the world's most influential societies and advanced economies are brought together for close-knit discussions. This year, Australia, India, and South Korea have been invited to attend as guest countries and to deepen the expertise and experience around the table. The leaders attending the summit represent over 60% of the people living in democracies around the world, representing over 2.2 billion people and over half of the world's economy. Okay, that's very important, obviously. Just to mention what what the overall talking points will be at the summit here. So the UK is hosting the G7 Summit, obviously at a critical time for the world as the major economies try to vaccinate their way out of the pandemic and return to addressing other crucial and pressing matters, such as promoting free trade and fighting climate change ahead of the UN Climate Change Conference in November, which the UK will also be hosting. Also at the G7 Summit, the UK hopes to unite the group under the Build Back Better slogan following the end of the COVID-19 pandemic. It wants the G7 to do this by predominantly, one, leading the global recovery from coronavirus while strengthening our resilience against future pandemics. The UK is also expected to call on fellow G7 leaders to make concrete commitments to vaccinate the entire world against coronavirus by the end of 2022. So not just their own respective countries, their aspirations are to have the entire world vaccinated, which is obviously a tall task, right? They're also going to talk about promoting our future prosperity by championing free and fair trade, which is very important, especially right now as we can see what the impacts of additional strain on our supply chain have led to sharp increases in consumer prices, right? They'll also be talking about climate change and preserving the planet's biodiversity, and finally, championing our shared values. So obviously, a lot of things that will be discussed from really global leaders here as we are shifting our mentality really to a post-pandemic world and seeing how we can all ultimately, as their slogan suggests, build back better, right? So definitely something to keep an eye on, and we will be providing a summary of these discussions when that information is available to us. So just wanted to give our viewers a little bit of a heads up that this is in fact happening. And like I said, macros are very important. So this is something you should definitely keep an eye on, and just to see what the world leaders are thinking about it and how that will impact not only us as a globe, but us on an individual basis as well, right? So moving on to our final segment of the show, I'll recap, first of all, my stock pick from last week. So obviously last week I mentioned Domino's Pizza as my stock pick, and it did fairly well. So Syed, if you can show what the opening price was on Monday, I believe it was about $432. Yeah, exactly. And by the end of the week, really, we finished at 452, and even after hours, it's about 454. So over the past 5 days, we saw a healthy 5% return from obviously a very well-established company here. So 5% returns in a matter of 5 trading days is obviously very good, nothing to sneeze at. And obviously, I think it continues to have a lot of upside, especially if we transition towards a high inflation economy here with a potential recession looming. Obviously, don't want to scare anyone here, but with the possibility there, I think these are the types of companies that will stay resilient ultimately, right? So again, this is more of a short to medium term hold for me. I don't plan to hold it long term, but continuing to hold it for now. So with that being said, Syed, you can recap your stock pick from last week.
Yeah, thanks, Deepak. So again, green for me too, but my pick was a bit different. I didn't choose any well-established food chain or pizza chain. I chose a short squeeze catalyst, and that's Build-A-Bear Workshop. And great news if you did invest last week, it's up 10.55%. So at market open, it was at $16.50, and as you can see right now, it's at $18.24. Even after hours, it's been showing greens. Once again, this is a short squeeze play. Wall Street Bets is all over this, and do I see it going up? It could potentially go up. Again, I'm not a part of Wall Street Bets by any means, so I can't really say. But if you have money that you're capable, like if you have money that you're comfortable losing, then this might be a good option for you if you want short term gains. But yeah, just be aware that it's going to be really volatile and it could go down really badly too. So yeah, keep an eye out on this this past week and this coming week and as well, and in the future as well, because like I said, Wall Street Bets is still going to be on it. Now moving on to our stock picks for this coming week, I wanted to talk about Palo Alto. So like just for those of you that don't know what Palo Alto is, basically like it hails from the Palo Alto networks. It hails from an era that predates to the cloud movement, right? Everything's on cloud nowadays. Like it's especially its specialty is rooted in firewalls, which are devices designed to monitor and protect traffic, right? Into and out of physical locations like an office or a data center. There's still plenty of need for Palo Alto network legacy services, but the real growth in the cloud is still real. Like it's still going. It's cloud is going to continue to grow regardless. So this company has used its high profitable platform to make sure that more than a dozen acquisitions of smaller cloud native firms over the past years, like they've done really well for themselves. And Palo Alto Networks has been able to maintain double-digit percentage growth because of that, and it remains the largest cybersecurity pure play operation as measured by revenue. Now a leading cloud security provider, this legacy firm is still very much a relevant player in the cybersecurity industry. So that's why I thought I would mention this stock. And just looking at its 1 year chart, 66%. And I think like if I'm a long-term investor, and this is a stock that like I see going up like in the next years as well, even more than this. So because like I mentioned, right, cloud isn't going anywhere, and then with cloud comes the security aspect, and Palo Alto is at the top of security, cloud security. So keep an eye on this stock, not only for this coming week, but the upcoming months and years ahead as well. Just to show our viewers the 5-day chart as well, I did pretty good as well. It was up 2.76% last week. And then moving on, honorable mention. So we mentioned that Bitcoin's tanking, and we mentioned this stock BITI, right, before. So thought I would let her show our viewers how this stock is doing. And since Bitcoin is tanking, this stock is showing greens. As you can see right here, over the past month, it's up 20.49%. As Bitcoin shows red, this inverse Bitcoin ETF shows greens. So I thought I'd let our viewers know about that, and keep this stock on your watch list too. As if you see red in Bitcoin, consider this ETF maybe. And once again, not financial advice, for educational purposes. Do your own due diligence, of course. And then now I'm going to throw it back to Deepak for him to show you his stock pick for this coming week.
I mean, just going back to BIT, I caught a lot of heat when I mentioned that stock previously, and as you can see, over the past month, it's up over 20% here. And if you even go to the 6-month chart there, you can see it's actually up 47%. So when I mentioned it as a hedge against Bitcoin, I caught a lot of heat. But clearly, if you did have this as a hedge, it would have protected you a little bit more on that downside from Bitcoin. So again, that's neither here nor there. Our job is to give you this information. What you do with it is, again, ultimately up to you, because we, at the end of the day, are not financial advisors. So again, moving on from that, I will want to mention my stock pick for this week. Again, it's more of an established company. Obviously, everyone's heard of American Express. So I don't need to go into detail explaining what they do, obviously. But again, I think they are a beneficiary of the reopening, more spending, and obviously a lot of consumers are out there trying to travel more, right? So they'll benefit from that as well. So again, over the past month, they've gained about 7%. They did show red over the last five trading days, I believe. It was a slight decline, modest decline, 0.7%. Nothing crazy there, but again, I think this is a chart with obviously long-term potential. This is an established company, and as consumer spending hopefully increases with the reopening here, they will be a great beneficiary of it. So again, this is more of a long-term play here, not just a week long. And if you are interested in this company, then it doesn't make sense to hold it for the short term. It is a long-term play ultimately. So yeah, no, that is all my stock pick for this upcoming trading week, and that ends our segment.
This is probably the moment that you all been waiting for, as we're gonna now announce the winner of our episode 25 giveaway. Just before we announce the winner, just wanted to once again thank everyone for their love and support. We've made it to 25 episodes, and we will continue to provide you great content going forward. And yeah, so with that being said, the winner of this giveaway, and again, I put all the eligible contestants into a random selector, and this lucky winner came out. So the winner is sbuller_89. Congratulations, you won yourself a $50 Amazon gift card. We'll reach out to you, Deepak or myself, on Instagram and message you and ask for your details. And while I announce this winner, I just wanted to again let all our viewers know that don't fall for any scams. I know for our very first giveaway, there was a fake account that was going around, and they were pretending to be us. So don't fall for those. And if you listen to our podcast, we always mention phishing and social engineering. So yeah, don't fall for those. This is obviously a legitimate giveaway, and we will contact you, our winner, and give you your reward. Once again, thank you for participating, and yeah, we'll have more giveaways coming ahead in the near future as well. So stay tuned for that as well. And yeah, anything to add, Deepak?
All great there, and obviously congratulations to the winner. As we approach hopefully our 50th episode, we'll have another giveaway, and again, we just want to thank everyone for their constant outpour of love and support, and regularly viewing our channel here. And ultimately, we are trying to do it for all of you, and it's just so motivating and so humbling to see so much engagement on our page, and truly grateful for everyone's love and support over the last 25 weeks, and hopefully it continues for the next 25 and the 25 after that.
For sure, yes. And with that being said, that does wrap up weekly episode 25. As always, if you enjoyed this episode and this content was educational or inspiring to you, be sure to like and subscribe. Like this episode and subscribe to our channel on YouTube. And also, for those of you streaming the podcast, thank you very much. And yeah, with that being said, I myself, Syed, and my co-host Deepak would like to thank you for tuning in, and we will see you guys next week. Have a great Sunday and a week ahead. Thank you, everyone.